Hey, it's Mark with a Bitcoin market update for May 7th, 2021. I published a video yesterday about the altcoin market. I got a few questions about specific altcoins. I'll get to the Bitcoin market update in about a minute, but I wanted to just really quickly address the questions. I don't in general go into specific altcoins. I spent a lot of time in yesterday's update talking about Ethereum and Dogecoin because they're really timely. And Ethereum is kind of a bellwether for the altcoin market. It's the anchor for a lot of the activity that happens in crypto. I don't talk about specific altcoins because I don't want to get into the coin picking game. I don't want to get into the discussions of like my coin is better than yours. Right now, it's a very speculative market. It's a frenzy-driven alt season. There's no rhyme or reason for a lot of the prices that you see. For that reason, I'm just not sure what I could provide. I don't know. If you think of anything that you're really looking for, please email me. And if you're looking for information about altcoins, I have two references that you might want to check out. The first of which are my altcoin reports. Those are reports on altcoins that I really like. And then there's a special issue I published in December 2020 about alt season, what to look for in altcoins, some ideas about how to allocate your funds. Both of those things will be linked in the description. Today I want to talk about Bitcoin. We remain in a bearish trading pattern. There are some real legit concerns in the short run. I've covered that in my recent updates. My analysis hasn't changed. We are still not near a market cycle peak. It will take a massive cataclysmic event to stop this bull market. And we have no signs of anything like that on the horizon. But at this moment, I do still urge caution. There are a lot of risks. There are a lot of things going on that are not this is not what I want to see. Now, there's never a bad time to buy Bitcoin. I assure you in a year or two, we're going to be looking back in this video. You watch this video back in 2 years and you'd be like, I can't believe he was even worried about a $50,000 Bitcoin. And I'm not worried at all, but this market moves at extremes. And I'm not buying until the price is in the buying zone of my plan. So let's look at that plan. And then I'll share some really awesome developments, or really interesting developments, positive developments in a few minutes. So right now, this is the buying zone of my plan, this black line. It's the 130 daily moving average. It's just an algorithm that smooths out price action over roughly 4 months, 4.5 months, and it plots it on a line on a chart. So as the price moves, the line moves. As the price moves up, as we've been doing, the line moves up along with price. And then eventually it will the black line will go above the price, either because the price goes down or because it just kind of lingers to long enough for this black line to catch up to it. It's been a while since that happened, but it's the natural ebbs and flows of the market. Until the price is below this black line, I don't buy. Doesn't mean you can't. There's never a bad time. The reason I don't buy, I'll talk more about this later, is because I already did. Back here, you can't see it on this chart because it only covers the closing prices, but this shows the intradaily moves. And you look back here at the beginning of September, there was a better part of a week where we had a chance to buy. I circled this whole thing because I was happy to buy at any point in September, even into October, basically all of September and October. You can see earlier in 2020, we had plenty of months to buy. And you can keep going back. You have access to the plan, so you can backtrack and see all the times that we would have had to buy. Right now is not one of those plans. In fact, there's a bearish trading pattern that I'm going to show you right now that leaves me a little concerned. We'll see. This is the wick-off distribution. Take a look at this schematic. This is what it looks like. This is just a model, but it's something that you see a lot in a lot of different markets and the way the prices move. And what I've done is taken this schematic and just look at the horizontal lines. You see the resistance lines. There's one resistance line where you get a first high, all-time high, another resistance line at that second higher high, and then at the very peak, that becomes the peak, right? Not the market cycle peak. I'm just talking about the peak of this specific schematic diagram. And then price wanders down and there's these support lines, and these come from the lower lows that we saw recently. And then there are these periods in between that are just the movements of the market, right? But we're looking at the resistance, the support, the big shifts, those big shifts. Everything in between is kind of just noise. So here's the price chart for Bitcoin. And these are the resistance lines, right? Price needs to go above that in order for us to break out of this wick-off distribution pattern. Right now, you can see we're not there. We're not there. We haven't broken that resistance, so there's nothing to talk about. Likewise, there are these support lines down here, and we haven't broken those either. So there's really nothing to talk about. We're still in this wick-off distribution pattern. On the upside, until we get up to 61,000, nothing to be excited about. On the downside, until we get to 46,000, nothing to be scared about, nothing to be worried about. Bitcoin's price has gone sideways since February. We have some bearish things going on, some peakish activity going on. The altcoins are going crazy. Pi cycle cross. Well, one of the variations of the pi cycle cross. There's some other data, scary data that I've covered in recent updates. And that's valid. That's absolutely valid. It's not a market cycle peak, but it's valid to be concerned about all those things. What do I think is going to happen? I think we're going to do something more like we did in 2019, 2016, 2020. In 2019, we had this amazing run, and then it went sideways for a while. This was July, right? August, into the beginning of September. So good 2.5 months where we went sideways. And then we just kind of bled out for the rest of the year. In 2016, we had the same kind of thing. We had this really big run sideways for months. And then we just kind of did one of these and we just bled out for a while until we recovered, came back up, and then started going up again. In 2012, did that twice. Up, down, and then bled out. Up, down, bled out. And I think we're going to do something like that. I mean, basically that's what we have been doing. And that's a beautiful thing. Like, I know it might seem a little scary to say that, but that was an amazing opportunity. All of those times were amazing opportunities. This was an amazing opportunity to buy. And you had months to do it. Here, 2016, middle of a raging bull market. Months to buy. July, August, September, October, November before we even get back to where we were before. All that time you had to buy and accumulate. Same back here. These are, those are the moments you live for, opportunities of a lifetime. That's the basis of my plan. So the reason that it might seem weird, especially if you're coming in, you might think I'm kind of stupid or crazy about not getting excited about actually being like, take the brakes off, put the brakes on, be cautious, be worried here, is because if you had been following my plan and you weren't subscribed, so you wouldn't even know about it. But if you had, look, you already bought here. You bought here. So you're sitting pretty. And that's kind of why, so that's the mindset and perspective that I'm coming. And if you wait and take advantage of those moments, have some fresh cash, cheap credit, where you can take advantage of those opportunities where price just goes sideways or bleeds out for months. People are panicked, bear market, we're all going to die. And you buy, when the price turns around, it's not coming back. And I'll show you some other data that reinforces that point. Let me go into some of the positive metrics that I was talking about. Because it's not all gloom and doom, right? Right now, it's actually, I'm far less worried now than I was in February. Far less worried now than I was in January, December. Even though the price is higher, I'm far less worried simply because the dynamics have changed. And let me show you a few things. So we saw that the buying zone on my plan was rising. MVRV Z-score, this is one of the measures of the peak, one of the things I look at before I even think about selling. It's going down, it's trending down. Price is going sideways, MVRV Z-score is trending down. Things are cooling off. It's going to take a lot more. Price is going to have to go a lot higher before we even start talking about a market cycle peak. That's not a bad thing. Pell multiple, that's poked up a little bit just in the past day, but let's just look at where we are in that circle. I think that's probably, it's not here, it's neither here nor there, but I like looking at that. It makes me feel a little better. And I don't think that we lose anything in the point, and the point is Pell multiples cooling off too. This is another one of the those market peak indicators. We see that. We see the MVRV score in the extreme zones I have in my plan. Go read the plan. You'll know what those are. Until then, we don't worry about peaks. ASOPR. ASOPR is a measure of sentiment. It's kind of a barometer for sentiment, how people feel. When people are feeling good about their Bitcoins, they tend to be able to part with them pretty quickly. That's actually ends, which is counterintuitive, but that means there's selling pressure. People are happy to get rid of their Bitcoins. And so when this goes down, that's good. That means the market is settling. People are more likely to hold on to their Bitcoins, even if the price goes back up. What I want to see it go into that red circle, which we're trending there. We just poked our head in there, popped right back up just yesterday. But we want to get down to this line, this black line here. And if we can do that, get down to that line and then start trending back up, that's a beautiful thing. It's going to be that's a sign that psychologically the market is reset. Then I want to show you these realized cap hodl waves. The realized cap hodl waves are a measure of the value of Bitcoins within certain groups of holders, people who haven't moved their Bitcoins for a fixed amount of time. In this case, this one is 1 to 3 months. And what you want to see is these hodl waves get bigger as you go to the longer time frames, if that makes sense. So this is kind of short term. This is people who have bought Bitcoin between the beginning of April back to the beginning of February, and they are for the most part holding. We don't see a lot of changes. It changes over time. So as you go more backwards in time, it covers a different time period. But the point is you want to see the band stay or grow. You don't want to see it shrink. When it shrinks, that means that these guys are selling. More of the value of their Bitcoins is going to somebody else. And we don't see that. We see it holding strong. 3 to 6 months holders have been going up. It keeps going up. 6 to 12 months after falling off a cliff for almost the entire year. You can see this falling off a cliff. And now that's starting to go up too. So more of the value is going to longer term holders. These tend to be people who have a lot more conviction. They tend to be people who need to see the price move a lot higher than newcomers before they start selling. We don't want selling pressure. Now, just holding, that doesn't push the prices up, but it does make sure that there's a floor, a bottom, a certain level where the price can't fall anymore because the sellers are gone. Everybody's holding. We want that. Do I want to do the hash ribbon now? Yeah, I'll talk about the hash ribbon. This is really interesting. There's a hash ribbon forming, which is it's a signal of, basically it's a relationship between the mining power and the difficulty of Bitcoin, the difficulty of the Bitcoin algorithm. And you can see this shaded line right there, right? You see a bunch of these on the chart right there. I circled it. That hash ribbon, when you see color like that, that means there's a hash ribbon forming. And one of the things that's really interesting when you look back in history about when these hash ribbons form is that whenever the ribbon ends and we go from colored to white, that marks the lowest price that that Bitcoin goes. Now, that doesn't mean that it can't go down in between this ribbon and the next one. It doesn't mean the price can't go down along the way to the next level up. That happens. We have seen where the price, so like we could exit this hash ribbon, it turns from shade to white, and see the price continue to go down. But then but whatever the low is in that hash ribbon, it stays that, we never go back to that, if that makes sense. And so when you look at where the hash ribbon emerged, going back to the beginning, it emerged at $4. Then we had another hash ribbon at $6, another one at $22, another one at $226, another one at $241, another one at $570, another one at $3,500, $7,200, $7,400, $9,200, $18,000. And who knows what price it'll be at this point. But what the significance of that is that when we emerge from that hash ribbon, we have never seen the price go back lower than the previous low for a hash ribbon, if that makes sense. Which means that even though the price can go down after we are in the clear, we're not getting catastrophic. We've never gotten catastrophic, cataclysmic, death to Bitcoin. It's just never happened. And in fact, pretty soon, within months, it's back off to the races. Also, look at the miners' outflow. It's very low. This is the Bitcoin that exits miner wallets. It's very low historically. And then the miners' position index, which is another measure of how much miners are selling, that is very low historically. So even though in the short term there are still some bad signs, new addresses are falling off a cliff, the number of addresses with a non-zero balance is dropping like crazy, meaning people are liquidating their entire wallet. They're just they're emptying out their Bitcoin wallets. There are negative inflows into the Bitcoin funds, the traditional investment funds that have been created, Grayscale and so on. The inflows into savings platforms like BlockFi, same thing, that's falling. You're seeing lower interest rates on Bitcoin deposits, so the reason that those rates are going down is because there's not as much demand for people to borrow against Bitcoin. So because the rate to lend has gone down, the rate to borrow the rate to borrow from these lenders has gone down, then the interest that you get on the deposit has to go down. And those have been going down. So these are symptomatic of a lot of things. There's better DeFi options, shift to altcoins, general loss of enthusiasm among institutional and traditional investors. And I've talked about these things. That's not good, but that's also the short run. These are longer term trends. I don't know what to make about this stuff with the miners. I don't know what to make about that. But either way, the longer it goes on, the better it is for everybody. Everything in between is just the ebbs and flows of the market. And when you look under the hood, behind the scenes, you can start to see the shifts, the kind that I'm talking about. And I think what's happened is OGs have had a chance to unload. They've taken profits. They've sold out in some cases. Institutions have taken profits, right? When Tesla's taken profits. Now, maybe they haven't sold out everything. I'm sure they haven't. But they've certainly taken some out, and they've passed those profits to people who either care about Bitcoin, have the patience to wait for the price to go up, or take a long-term view of the market, and maybe all three. Which is a good thing. That's what we want, right? And that happens because the market's been flat. Well, Bitcoin has been flat for a few months. A lot of the money that went into Bitcoin has gone into altcoins. We know that because the dominance has changed. The total market cap hasn't changed that much. It's gone up about 10%, but the dominance has changed a lot. We see that this buying zone is coming up. And, we'll just have to see how it goes as far as alt season. If Bitcoin goes down, alt season ends. If Bitcoin goes down, alt season ends. Does that mean everything crashes 90%? I doubt it. Some of these things will, but most won't. And if they do, anything that's legit, that's massive opportunity, amazing opportunity. Probably the last time you're going to get the chance to buy Bitcoin and altcoins at whatever price we end at, whatever this move is. Probably the last time, I would have to guess. People say we need institutions. We don't need institutions. We need believers. People say we need mainstream adoption. We don't need mainstream adoption. We need conviction. That's what sets the foundation for the next 4x or 6x in Bitcoin and whatever in altcoins. Look at your altcoin portfolio right now. We may get a 50%, 70% drop, bleed out for 4 months. But whatever you see today, multiply by 5, maybe even multiply by 8. And that's what we have to look forward to. And I do think that we can get to a $200,000 to $300,000 Bitcoin during this market cycle. But we need these moments to settle. The crashes, the sideways movements. These are healthy for the market. They create opportunities. And sometimes they last for months. But for those who are courageous enough to take advantage of those opportunities, literally, the sky is the limit. The sky is the limit. That's the opportunity that we last had here. We'll get another one of those opportunities again. It's only a matter of time. Now, will that happen now? Will this buy zone either go up to meet the price? Will the price fall down to the buy zone? Will it just keep going sideways? We'll see. This market has a way of blasting off just when you think it has to crash, and crashing just when you think it has to blast off. I stick to my plan set. I don't have to worry about that. There's never a bad time to buy Bitcoin, altcoins, average in. They will follow Bitcoin wherever it goes. The question now is, which way does Bitcoin go? Over the long run, as of now, I don't see anything to worry about. Relax and enjoy the ride.